Hello, welcome to this question from the May 2023 AQA A-Level Accounting, Paper 1. It's question 12. It involves goods for own use and inventory valuation. Let's see what we've got in the question then. So it's question number 12. I've got the following information has been extracted from the books of account for Peter for the year ended the 31st of January 2023. Inventory at the 1st of February 2022, so that's the opening inventory, we've got £34,195. Inventory at the 31st of January 2023, so that's going to be the closed inventory, is £29,785. Purchases are £155,000. Returns inwards are £16,440, and revenue is £225,000. So just remember, returns inwards are as sales returns. Right, additional information now. I've got 2 points. First point, during the year ended the 31st of January 2023, Peter took goods with a selling price of £2,800 for his own use, which have not been recorded in the books of account. The markup on these goods was 25%. And point 2, included in the inventory at the 31st January 2023 were 2,000 items with damaged packing. These items cost £13.50 each and have a selling price of £14.65 each. The total cost of replacing the packaging is £2,850. So for point number 1, we're going to have to work out the goods for own use. And in point number 2, we're going to work out the valuation of inventory. Right, let's see what it actually asked us to do specifically. Prepare the trading section of the income statement to show the gross profit for the year ended 31st of January 2023. Now, the income statement, the trading section, stops at the gross profit. So we need to go up to the gross profit. Right, so to save time, I'll set out the template for us. So I've got the revenue at the top. Now I've got 3 columns. The reason I've got 3 columns is I'm going to work out the goods for own use. So the revenue then, we can get information from the information in the question. So the revenue, we were told, was £225,000. Returns inwards, we're going to deduct them from the revenue because our customers have returned goods to us. So returns inwards were £16,440. Now we combine them together, we get what's called the net revenue. So 225,000, take away £16,440, that's going to give us net revenue of £208,560. Just let me insert a line to separate the cost of sales. Now the cost of sales, we start off with the opening inventory, and that goes in the middle column. So there's no changes to the opening inventory. So go back to the question for opening inventory, and there we have it. The 1st of February 2022 is £34,195. £34,195. Now we've got purchases, we've also got goods for own use. So they're going to go into the first column. Now our purchases come directly from the information in the question, and we have £155,000 of purchases. Now, goods for your own use, we've got to work those out now. So I've got my workings underneath, so goods for own use, and we're told, so we go back to the information in the question, Peter took goods with a selling price of £2,800 for his own use. So the selling price of those goods were £2,800. Now we're told the markup on these goods was 25%. So that means the cost of the goods is 100%. And the selling price then is going to be 125%. So it's a markup of 25%. Now we've got to work out then the cost of these goods. So basically we want 100%. So we know that 2,800 is 125%. We've got to work out 100%. So to work out the cost of goods, you take your selling price, 2,800. You divide by 125, that'll give us 1%. And we want 100%, so you times by 100. So if you do that calculation, you've got positive 2,800 times 100 divided by 125. You get the cost of the goods then is going to be £2,240. So these are the goods for his own use. So that £2,240 now has got to be excluded from the 155,000 purchases. So it's negative 2240. So now we've got the net purchases. It's going to be 155,000. Take away the 2240, which gives us £152,760. Now we add them onto the opening inventory. And And then we get £186,955. Then we take away our closing inventory. Now, closing inventory, we've got some work to do in closing inventory. We have some damaged packing, and we need to work out the cost of the closing inventory and the net realizable value. So let's go back to the question now. There were 2,000 items with damaged packing, and these items originally cost £13.50 each. So the cost of the items then would be 2,000 items times £13.50. So the original cost of these items would be 2,000 times the £30.50, it'd be £27,000. These items have been damaged, so we've got to work out the net realizable value, because it's valued at the lower of the cost and the net realizable value. Net realizable value, then, we want to know what the selling price per unit was. So back to the question, we were told what that was. Selling price of £14.65. £14.65. And there are 2,000 units. 2,000 units times the 1465. So 1465 times 2,000. That's going to give us a selling value of 1465 times 2,000, 29,300. And the net realizable value is your revenue, is 29,300. Take away the replacement packaging cost. So go back to the question, we were told what that was. Replacement packaging cost us £2,850. And deduct £2,850. So my net realizable value then is 29,300. Take away the £2,850, giving me £26,450. So now you compare the net realizable value with the cost. And the net realizable value is the lowest one. So that's what we're going to value our inventory at. So the original value of the inventory, we will get that from the information in the question. That was 29,785. It's a closing inventory. So 29,785. Now we've got to exclude the items at cost because the net realizable value is lower. And the cost we worked out was £27,000. So I'm going to take away the £27,000. I'm going to add the net realizable value, which is the 26,450. That gives us a revised closing inventory figure of 29,235. So that's the closing inventory in my cost of sales section. So 29,235. So take away 29,235. So my cost of sales then is going to be 186,955. Take away the 29,235, giving us 157,720. Now my gross profit, that's going to be your net revenue of 208,560. Take away your cost of sales of 157,720 to give us a gross profit of £50,840. So I'll just make it a bit smaller so you can see it all. There you go. So the extract from the income statement up to the gross profit, which is the trader section, is £50,840. So I hope you enjoyed the video. Thank you for watching, and I'll speak to you next time. So take care then. Bye-bye.